High-yield bonds, also known as junk bonds, hit all-time highs. Are stocks going to hit all-time high next? Right now, energy companies are the biggest winners, and I believe that's because crude oil has re-entered a new bull market. And I'll explain what bull market means in practical terms and what target for oil to expect in the near term. And we'll finish up on a small tutorial on how to trade cryptocurrencies such as Bitcoin and Solana, so stay until the end and we will try and answer any questions if you have any. Don't forget to hit the like button, subscribe to the channel, share this video. This is MasterChartsTrading.com market recap for Friday, June 20th, 2025. If you're a subscriber, stay tuned. We'll be covering various securities in the members only video, market breadth, natural gas, various large cap, various ETFs, large cap stocks, some foreign ETFs, as well as quite a bit of speculative securities. Some of them are big names such as Archer Daniels Midland, Warner Brothers. Some of them are less known, such as Taysha Gene Therapeutics and Shoals Technology, and some of the gold related. Throughout the presentation, I'll be using my proprietary MasterChartsTrading.com price action indicators, which you can see on this chart, this green, blue, red, and yellow lines. So let's today start with high yield bonds, and high yield bonds, also known as junk debt, are just that. They are junk because they are considered low quality and at a high risk of default. For practical purposes, they trade like stocks. Their volatility is approaching stocks. So versus, for example, bonds like Treasury bonds, they trade much more conservatively and also almost opposite to what the regular stocks are doing. But high yield bonds usually trade with the stocks. So it's a very good indicator of health of the stock market when high yield bonds and stocks are moving together in lockstep. So on this chart, we can see high yield bonds. This is a weekly chart, by the way, so each candlestick is a week's worth of activity. So on this chart, we can see that high yield bonds, junk debt, just hit an all-time high. We can zoom out and see, yes, indeed, these are all-time highs. Now, remember that this chart is adjusted for dividends or adjusted for coupon. These are high yield bonds and they yield quite a bit of yield. We can remove the yield by clicking this button here that says IDJ, and you can see that without the dividends, without the yield, we're nowhere near all-time highs. However, with the dividends, so total return, we are at record highs. And I think this is a more appropriate way to look at this security. So why do I care about high yield bonds and them hitting all-time highs? Because notice down below here we have what's called a correlation coefficient. So correlation to the S&P 500. How close do high yield bonds follow along with the actual S&P 500, the actual index? And you can see that they spend most of their time in the positive territory, meaning that high yield bonds and stocks do the same thing on vast majority of the time. We can go back all the way to 2008 and you can see that it's pretty much almost 100% correlation with occasional foray into negative territory, but not that much. Most of the time they stay positive in the sense of they do the same thing as S&P 500. And again, notice that S&P 500, or rather the high yield bonds, broke to all-time highs. We can now look at a more granular on the daily chart. So we're just looking at the weekly chart. So high yield bonds on the daily charts, you can just see them better. These were previous highs set on March 3rd, 2025 this year. And you can see that we gapped right there between the 9th of May and 13th of May and 12th of May, and we gapped to new records, and continued higher pretty much relentlessly since then. Today on Friday, June 20th, 2025, we did hit an all-time high yet again. So this is what's called a bullish or a positive divergence when high yield bonds are hitting records. And if we look at S&P 500, notice that we have not hit yet all-time highs. So previous all-time highs were set right there on 19th of February, and we have not yet reached those levels. We can try to include the dividends with S&P 500 ETF SPY, and we still have not yet hit an all-time high. So this is good news to me when high yield bonds hit records while S&P 500 is still behind. It's telling me that because of the correlation that I just showed, there is a very good chance that stocks S&P 500 will indeed hit records. Now, what are the negatives about this chart of S&P 500? So we can see on this chart several gaps. So one gap, that's a partial gap right there between 23rd and 25th of May. But the biggest gap, of course, is right there. It's pretty visible. It's between 9th of May and the 12th of May. So there's a gap. Well, I guess we can say that there's a gap 1, 2, and then there's another gap way back here in April. And all of these gaps will eventually get closed, but we just don't know at what point. Sometimes they get closed immediately, get filled. In other words, the price will pull back, and that would be considered a gap filled. Like, for example, right there where I'm hovering on the 21st of March of this year, and then price gapped on the 24th of March up, but it was filled almost immediately just a few days later, so because the price pulled back. So that gap was immediately filled. These three gaps, maybe a partial, basically three that I can see right now, have not yet been filled. So that's a negative about this chart, meaning that at some point in the future, the gaps will get filled. The million-dollar question, of course, is will they get filled before we hit records or after? If we hit records first, then there is a good chance we can just keep going. In fact, we can estimate where we're going to get to when or if we break to new records by looking at this pattern here. So this V-shaped pattern that most likely once we hit the records, that would be a complete pattern. So the depth of this pattern, we can kind of measure it, how deep this pattern is about 25%. So the normal estimation of how far this will run, or this is about 1,200 points on S&P 500. So how far will it run? There is a good chance it will continue running, not necessarily immediately, but to about 7,400. So who knows? Maybe by the end of the year we'll get to the 7,400 mark. Once again, is it going to happen after we fill the gaps or before we fill the gaps? So that's $1 million question, and I'd love to know what you think. Make a comment below. What do you think? Will the gaps get filled first and then we will see a new record, or will we see records first and then the gaps will get filled? Some of the biggest winners right now, of course, is the energy ETF, energy exchange traded fund. So whereas many stocks and ETFs currently are at least correcting or pulling back or trading sideways, we see a new breakout for the energy ETF. So the new breakout for energy just occurred a few days ago on the 17th of June. Perhaps the companies that are providing, or the traders that trade these companies within this ETF are seeing what's happening in the Middle East, and they're perhaps thinking that we will see further price appreciation for oil, to which I'll get in a few seconds. But just looking at this chart, definitely is a bullish chart. Notice that before we dropped below this yellow support resistance line, which means that there is a bear market. Now we have a new close above this blue support resistance line. You can find out more about by going to the link in the description for the lines. You can have them on your chart. So this breakout just occurred, and the energy companies are performing better than some of the other companies within the S&P 500. For example, here's ExxonMobil, also just broke out. Again, a new alert that I sent to my subscribers. Same goes for Chevron, is approaching new breakout levels as well. So this is a worrisome sign. And of course, when we look at oil, so currently we're looking at oil, crude oil in the United States. This is a light crude oil futures, United States light crude oil futures, but it's very similar in European trading as well. So we're looking at oil, and we're seeing a new bull market. And we did break below, we went as low as $54 a few weeks ago. I thought we were going to collapse lower. We rallied, notice towards this red support resistance line, and technically speaking, that's where you want to sell it short. However, I was just not sure that I want to sell it short. I was definitely correct here. And we saw a strong spike higher, and now we see a new bull market for crude oil. We see a close above this blue support resistance line, which is at 73.49. The price on Friday closed at 73.84. We can also look at the same same price levels on the weekly chart, and it's even more clear. There's the new breakout for crude oil right there on Friday. So definitely oil seems to want to go higher. Now, what are the potential price targets for oil? So this high from week of January 13th of this year, 2025, it needs to be taken out before we make any projections. So let's just say that this high is indeed taken out, and then we can kind of draw this pattern like that. Again, a V-shaped sort of pattern with a significant depth. This is from 54 to 79, so a $25 depth of this pattern. If this pattern gets duplicated on the upside, which is a normal, again, target, we can see oil well above $100. That's about 108 or so. So, not a good sign, obviously. Notice this previous spike for oil of similar magnitude occurred back in 2022, and if you recall, this was when Russia invaded Ukraine, which is still going on, by the way. So we now have a new very freaky war, which can easily escalate and potentially even get into a nuclear phase as well. We have, Iran claiming to, or Israeli claiming that Iran is actually very close to producing a nuclear weapon. So right now I'm seeing images of Iranian missiles landing in Israel. So imagine if one of those was nuclear. So pretty scary scenario. It's literally a Pandora's box. If that happens, I don't even know. I fear to even think about it, what's going to happen. So big, nasty problems could happen. So let's, fingers crossed, we will not see a nuclear escalation. But definitely oil traders are indeed reacting to this potential disruptions of Strait of Hormuz, and Strait of Hormuz is where about 1/5 of oil transits, which is in Persian Gulf. So again, let's hope that this spike is going to be minor, and we will see again where this leads us. But for now, definitely oil is leading and oil companies are also leading. Very briefly, I want to touch base on the dollar. Not much actually about this chart I can say. Dollar hit a 3-year low and then bounced. As far as gold is concerned, we're next to records and we pulled back a little bit. So not really much we can say about this. However, this pattern is quite bullish for gold. And if it breaks out, we can see a significant move to the upside as well. Right, let's look at how to trade cryptocurrencies, in this case Solana. So I prefer to trade on daily charts. This is a daily chart, so notice that each candlestick is 1 day's worth of activity. The reason why I do that mostly is because if you go, very granular into like 1 hour chart or 5-minute chart, then you get much more false signals. Now with daily charts, you get a much more clear picture. Notice this, the way this, sometimes of course you can see a few whipsaws, but let's just go back to like this area from 2023. You can see we can short, turn around into bull market, one whipsaw, so incorrect signal right there, and then a huge win. Notice. We basically buy on close above the blue line. That's all we need to know. Then we have several opportunities to do the same thing. Eventually, this runs out, and for example, right now we turned around back into a bear market. So back in the February of this year, 2025, Solana re-entered a bear market, and now it's back in the bear market. A few weeks ago, right there on 29th of May, I actually wrote it live, short now. So yes, indeed, you would have been correct to short Solana at that point. We can look at the same thing for Bitcoin. So I just showed you how to trade Solana on daily chart, but we can look on Bitcoin on even bigger chart, and you will notice that for weekly charts, so each candlestick is a week's worth of activity, it's even better. The only thing you need to remember that if you have my indicators, the Master Charts Trading price action indicators, change the lengths to 52. We need to change the lengths to 52 if we're trading on weekly charts. So notice this is a Bitcoin, so let's just start there, for example, in year 2000. Bitcoin, so for example, there's the breakout into new bull market. It occurred in July of 2020. I can tell you exact date. And then notice this big, enormous move. So from 9,000 to 60,000. Okay. Another opportunity right there to buy. So again, we buy on close above the blue line. That's all we gotta do. When we're buying, when we're selling short, and it does happen that we're, the Bitcoin goes into a bear market, so there is the negative, so selling. You can see it worked really well. Then we again turn around into a new bull market in 2023, and we again start buying it. And you can see huge, very nice gains that continue till now. So once again, buy on close above the blue line. Latest opportunity to buy, I actually bought myself. So I bought right there back in 22nd of April. I bought around $91,000. I'm still sitting in the position. So this is how you trade Solana, Bitcoin, and pretty much any other cryptocurrency that you can think about. You can trade them both on the upside and on the downside. And that's it for this week's recap. Please stay tuned on how to find me on the internet. And the best way to do it is, of course, to go to MasterChartsTrading.com. Click on sign up. Again, I have 2 products and 1 bundle. So if you're looking for trading indicators, these lines on the chart, you can have them on your chart for TradingView.com. Once you sign up on free TradingView.com account, you need a free TradingView.com account. You don't need a paid one. Come back to my site, MasterChartsTrading.com. Sign up for the indicators, and I will open the door for you